Good afternoon, welcome to this week's chat with Bill. Thanks for coming on, Bill. Twice a year we have the Financial Stability Report, I think they call it, where Mark Hardy tells us what he's worried about in the economy and how he's going to try and fix it. I think everyone knows at the moment house prices are the big concern. And what has he sort of said to put us all at rest from this?
Well, I think the key thing is, if anybody was expecting any sort of impact, we didn't get it. I mean, the major thing, again, we're talking about, 4.5 times earnings and a 15% something or other, which I didn't even read. But I mean, again, the salary to loan ratio was already basically what has been implemented by both RBS and Lloyds. So that really, didn't have any effect. But now, I looked through it, okay? And if we saw, I don't know where it is now, but I mean, we saw cable touch 170.36, which is very close to that 5-year high of 170.60 we got recently. Now, to me, in my limited understanding of the market, to me, I looked at that as being a sort of subtle interest rate hike, rather than raising rates 25 basis points. We've talked about this before, and even the BBA and the Mortgage Lenders Association goes on, anywhere from 8.4 to 11 million people that are on some type of, fixed rate mortgages or this, that, or the other, would be affected by an immediate and actual interest rate hike, okay? Now, I still feel that we will probably get an interest rate hike probably in November, okay? I don't think we'd get one in December because I don't think the high street would be too pleased if everybody started planning their Christmas, shopping list, and all of a sudden it's 25 basis points more expensive. I mean, I think you could probably wouldn't see anybody in the shops. Anything later, could that sort of affecting, next May's general election? But I looked at that financial, whatever you call it, thing, as a subtle interest rate hike today.
And so, how did they ensue that there was going to be is it? I mean, they're obviously worried about people not being able, house prices going up too quickly, not being able to afford their mortgages, particularly when rates go up. But how's he actually told us there's going to be an interest rate hike?
Well, he hasn't. Markets just implied it again. But one of the things that I think maybe if you look through it, okay, this doesn't affect, of course, cash buyers. What area are we talking about? London and the Southeast, okay? Do you think Roman Abramovich even knows what a mortgage is? And if you look at probably the strongest, increase in mortgages offered by to let. Well, now those are excluded, okay? And the one thing you have to look at is, even, I don't know whether it's the NHS, but they're talking, the population of the UK could grow by another 8 million by 2020. Well, if we were 50,000 houses a year short 25 years ago, how many houses are we going to be short if we have another 8 million people? So it's a question of, if we're going to put the lid on mortgages, if we're going to put a lid on construction,
You're going to build some.
I've got a 6-bedroom house. Maybe I've taken a few immigrants.
All right. Well, so not too much to dwell on that topic. Let's go on to the GDP. Hopefully, finally, we've got rid of the cold weather, which we seem to talk about every week a few months ago. Is that it for the weather?
Yes, I think so. And I think one of the things that you have to look through, and if you saw it, after we got this GDP number,
with minus 2.9%.
Yeah, but we still have the NASDAQ and the S&P at multi-year highs, okay? So the equity market's discounted, although the bond market, I think the 10-year traded down to 2.5%. But as you said, I think two things you have to look at is, one, we still have the, quote, residual effects of a very horrific cold winter. But I think one of the things where the economists may have gotten it really wrong, because I think, in all the number of economists that Bloomberg, nobody didn't come close to minus 2.9. I mean, the whisper was 2.1 or 2.2. But I think the key thing to me, looking through that, was maybe the assumption made on how much consumer spending would have been done in the quarter in reference to Obamacare. Well, as we saw, that was weeks and months late because of the computer glitch and this, that, and the other. So maybe the consumer spending on Obamacare didn't appear. To me, that was the major factor. And also, again, are we looking at a number? And I remember years ago when I was at that other channel as a presenter, and I remember one time we got a GDP number, and I made some kind of comment, and I know the executive producer grabbed me, when I finished, he said, "What kind of nonsense is that?" I said, "Well, Charlie, I didn't remember what his name was." I said, "I'm a trader. I have to look at a number. I got 5 or 10 seconds." I said, "Your background is economist. You got 3 or 4 chances each quarter to evaluate, reevaluate GDP number." So I also think the simple fact is, maybe the key thing is not revising the GDP number, but revising the components, okay? Let's go back 20, 25 years ago, right? GDP didn't include mobile telephones, laptops, iPads and stuff like that. I mean, just think how big that industry is, okay? So, I mean, I think what you have to do is change the components of what does affect growth.
To get a more up-to-date,
yes, a realistic approach, okay?
Okay, so even though it was worse than expected, people just discounted that and thought, right, let's buy some shares.
Go on with your question, okay? If the people have not changed their view, maybe it's going to be 3 to 3.2 for this quarter. Well, let's just say it is 3. Well, 3 looks a lot better when the previous number was minus 2.9. So it's, all of a sudden we could have a dramatic shift again, although, as I just said, it's coming from a much lower number.
Yeah, okay. Otherwise, data's been pretty good.
Yes.
We're happy?
Yes.
Good. We've got a lot of, well, obviously I see what our clients are doing. A lot of clients are long Europe now, long the indices.
Yes.
And they're short the US. Why? Is that the right way to think about it?
Well, I think one of the things that you have to look at, the reason why, with the euro, still 136. And I mean, we've seen this move in euro dollar twice now in the past 3.5 years. The most recent was last May, when Bernanke said we're going to start tapering. So all of a sudden, you had panic selling, Turkey, Poland, Hungary, Eastern European, emerging markets. Now that supported the euro. Also, as we see right now, it was reinforced when the European Central Bank actually dropped rates, okay? So what's happening to bond yields? Spain, Italy, Greece, Ireland. So all of a sudden now you're having money going into the euro to buy euro bonds, okay? So one of the things, and I think if anybody looks at the charts, okay, more and more analysts are saying, the move in euro, the move in the dollar, the move in sterling is going to be interest rate related, or yield related, okay? And I mean, the Treasury 10-year, 2.5%. Well, there are other better yields out there, okay? So therefore, that's not being helpful for the dollar. I mean, I think the last time I looked, gold was off $10 or something.
Okay, let's finish up with the Middle East, just because it's topical at the moment.
Sure.
It hasn't been in the news that much this week.
Yeah.
Is there any reason why? I mean,
well,
is no one that worried about it?
Well, I think, yes and no. We were worried about it initially, and I think what we saw last week, okay, when the Norwegian Central Bank, okay, went from extremely hawkish to extremely dovish, and just in their quarterly meeting, and basically they were worried about Brent going to 120. Well, I mean, the last I looked, I think Brent was well below 115. So it's a question of Iran, is coming on stream and coming on stream even faster. Now, do we get a political situation where, and I mean, the European Union and the US have already said, we want to discuss a number of socio-political situations. Okay, also, we've had Saudi Arabia this week saying, don't worry, boy, don't worry, there'll be enough oil. And I mean, this was well before you were born, what was it, 2008, when we didn't have any geopolitical risk, and Brent got very close to 150. Well, we won't see that again. And also remember, there's no inflation. But then on inflation, will we see when we get the June numbers here in the UK? I would have to feel that we're going to get a probably 3 or 4p increase in the petrol price, okay? So that will, and I know there's one major dealer out there talking, that inflation in the UK could end at like 1%. By the end of this year. Well, I don't know, maybe they're looking at the chart upside down, but I can't see that. I don't see any problem with inflation, but hopefully saner heads, cooler heads will prevail in the Middle East, although, we do have you know, a socio-political problem. And I mean, even now, unfortunately, like in the paper today, I think one of the commanding generals of the British forces, you know, says that, you know, Iraq was a dumb decision. And I mean, excuse me, I have to agree with that. I mean, I guess, excuse me, I have to go back to Marshal Tito, you know, in what was then called Yugoslavia. Well, everybody may have hated Marshal Tito, but the simple fact is, you know, right or wrong, you know, he made sure that, you know, that the Serbians were in Montenegro, this, that, and the other, you know, and he kept the political tensions at a lower level. And I guess from my standpoint, is I lived in Ethiopia for years, okay, and you had the northern and the southern, okay, Ethiopians that hated each other. So he had the southern army in the north and the northern army in the south, and they sort of, you know, kept things quiet. And I think the thing that we may have to look at it. I'm reading Jeremy Paxman's book right now, and it's quite interesting, you know, about the First World War. And I think on page 13 he's talking about who gave the French and the English the right to get a pencil and a sheet of paper and say, okay, now we're going to call this country Iraq. Okay? And I mean, in that generation, okay, how do you know whether you're North Korean or South Korean or North Vietnamese or South Vietnamese? And of course, you're in the UK. You've got a lot to be, you know, with India and Pakistan. You can't just draw a line and say, okay, you know, you live north of Watford, so you're now Scottish or this, that, or the other. So, but I don't mean to be frivolous about this, but, you know, you're talking about religious groups that have been at loggerheads with each other for 2,000 or 3,000 years, okay? And I mean, even if you believe T.E. Lawrence, hence the reason he resigned, he said, you don't understand. And I mean, he worked with the Arabs, okay, for 3 or 4 years of the first week. He said, you don't understand, you know, how they think. And you just can't draw an artificial line because, you know, if you live in Saudi Arabia and you live in the desert, how do you know that you're not in Saudi Arabia anymore? You're in Iraq.
Perfect. Well, thank you, Bill. History lesson almost.
Oh, of course.